So Tuesday morning we have opened and we've opened with a shotgun up to this blue line here, and it looks like we may have found a little resistance on the blue line, and we are gonna see what happens. We have this mess of crisscrossed angled tangent support lines to look at, and I will explain what all those are right now and talk about what we're looking at. So I guess quickly, this is Brian Lewis of MMT Investing, and things just changed. So as you can see here, we are trending underneath this high line. This is a high bull line that's above our bull market bull trap support line here. And in order for the bears to come back, we're going to need a reversal off of this line. And we're going to need a break of 1, 2, 3 lines really before the bears can really take back control. And so these are big angled tangents that I'll come out here and look at. And these tangents are, as always, smashing that like button right now to help me out with the YouTube algorithm. So let's get out here and take a look at these lines and what this thing looks like, the whole model, and where we are. And if you didn't see my Nikkei Japanification #3 video, please check that out because it explains the whole model with a really, really good comparison to the Japan bubble. And all of these trend lines work on the Japan model. I have all these trend lines on that one. That is a really cool video. And so here we are. We're up, bulls in control. We're getting resistance across this trend line, and what we have here is a support line for this bull run, and then I have this blue line, which I've been calling the out of bounds line, because when we get away from that bull market line and start hitting this blue line, this is like a big reversal. And then when we got underneath the support line here, we got a coil into this blue line before we reversed out. And now we have stayed above the bull line, and now we're in this zone here, kind of bouncing between the blue and the green lines. And it looks something like a coil or a double top on this bull run. So this, let's see. Yeah, I've been looking at these tangents, and I didn't notice until I looked at the Nikkei chart that we're getting like a double top back test of all of these super support trend line tests. So you break the trend line and immediately back test it, and then you do a bull trap across and double test it. You do a break and immediately double test it, and then you do the bull run across, and then you do a big double test. So I'm thinking that it might, looking at the kind of double top breaking, it looks like the tangent line is not to the first test of the line. It should be on the second one. And I'm not gonna mess with that right now, but I could have drawn the tangent line like through the first test here instead of the second one. It looks like this is the first test maybe instead of the second one. I didn't realize that we were getting double tops until I looked at the Japan video. So, but these first trend line first tests are really cool too, because if you draw a tangent through the first test, it gets you down right to where the dead cat bounces. So if this tangent line is incorrect and this is an inside tangent line on a double top, this could still be really useful to sort of find a dead cat bounce if we do get down in here. And yeah, I guess that's probably sufficient for this video. Just looking at the opening move, and the bulls are in control, and we're pressing up against some resistance up here, and we'll see what happens today. Should be another interesting day. and some high action, some high activity. And I am still fully on the Japan versus everything bubble model, and this is a it's probably closer to 4 month credit contraction cycle, which has the general shape of a drawdown and a bounce and a bounce. And then usually in a bear market, the bounces kind of go down and down. So that's what we're looking for, is the credit contraction cycle model shape to play out. And we're just kind of looking at these trend lines, these super long support trend lines. So this is the trend line that goes back to the bottom of the 2018 crash, and then we have the trend line that goes back to the 2008 financial crisis crash, and then we have the trend line down here that goes back to the 1982 mean reverted bottom of the stock market before this entire everything bubble came up. So in order to set up a longer term bear market, we do have to get underneath this line and back test it, and then probably do a long bull run and back test it again. And once we have double back tested the bottom side of this Volcker line, that would set up a longer term bear market. But as for now, we are just sitting up here in drama land with all these crisscross trend lines and just getting some crazy action. So have fun trading, and I have zero intention of getting out of any of my shorts. I fully expect this thing to come down below the Volcker line pretty soon, especially if this is a double top reversal pattern like we've seen a bunch of times under these trend lines on the S&P and on the Nikkei. We see that every time we get underneath one of these major support levels, we double test it immediately, and then we do a bull trap and double test it again. Double test it immediately, and then bull trap and double test it again. So that's kind of what we're looking at here. And then I've wiggled these lines a little bit to set them on the shoulders instead of the peaks, because that gets more reactions, and I think the lines are more useful if you throw them on the shoulders of the action instead of on the peaks. And you can see they get a little bit more reactions than if I had put the line up on top. Okay, so happy trading and have fun out there.